Hello, welcome everybody. Today is NFP day. We got quite a bit on the docket as far as new US macroeconomic information. Go ahead and tell me how you are doing today in the chat. Ooh, I am ready to start my busy morning for me, that's for sure. Between all the outlooks that I've had to go through to prepare for the stream and post on the Discord, so there's Moody's, Nordea, there's their forecast for euro dollar. You can see the euro dollar forecast right there. We got S&P Global. We got ARK Invest Bitcoin monthly, Westpac's weekly and monthly outlooks. Oh man, look how red my face gets when the Westpac outlooks come on. I get so red. Oh my god. Nice to see you, James. Nice to see you. Vilios, nice to see you. Also, there's this that I like to bring to everyone's attention. I posted it in the Outlooks channel by a good friend, Steven. And he's got this 37-page breakdown of a bunch of macroeconomic information in the United States. So if you wanted some, breakdown, something that's a little easier to read, I'd say that has a lot of charts and a lot of interpretations of those charts. Yeah, this is a particularly good outlook to read. We also got this one, Bank of England review from Danske Bank. We stay negative on pound with Bank of England nearing peak, which is the interpretation we had on the Bank of England report when it came out yesterday, and they said, oh, we're going to only hike 25 basis points. Let's see here. I closed some trades today and holding one at break even on Euro Swissy. Well, we'll take a look at Euro Swissy. How about that? Let's see here. We also got some new MUFG outlooks. They got this analysis here on JGBs after the effectively doing their interpretations on, hey, this is how the Bank of Japan changed their outlook, and this is probably how we should change our interpretation of the JGBs now. This is MUFG's FX outlook, and this actually breaks down like, hey, this is what we think's actually gonna happen. If I just scroll down here because I'm on the interested site, hey, market implications, just like with Danske Bank over here, MUFG is taking a look here at Euro Pound. And yeah, they have, if I could, I can't roll it to the left. The chat and my face cam are in the way because of how they've, they didn't center this. They have all this, I hate it when they have outlooks like this where it's just, look at all this blank space here on the left-hand side. And then when I try and zoom in here, like, this is hardly legible to you guys. And then when I actually zoom in to make it legible, like, there's chat in the way. It's like, I don't know. I definitely don't like that. Anyway, it's another little expectation on what a large institution has for a Euro Pound, the exchange rate on Euro Pound. We'll do a bit of analysis on Euro Pound. So Euro Swissy, Euro Pound, those two are on the docket right now for me to look at when we go to the charts. And we have this one. This one I posted in the Outlooks channel not too long ago. Capital Market Outlook by Merrill. All these outlooks, by the way, are public and totally available, except for this Moody's Analytics one. And I'm not going to show you anything other than the first page here. But when you do click on the link that takes you to this outlook, you're asked to make an account. All you got to do is make an account on Moody's website, and then you can view it once you make their account. That's it. So with that in mind, also there's this Morning Outlooks, Morning Consult outlook on geopolitical issues. When you click on this full report, they want you to start a trial. Just read these key takeaway section right here. And that'll give you the gist of this 65-page report. If someone has access to Morning Consult and is willing to share some of the more interesting snippets when they read through it on their own time, I'd appreciate that. There's been... Let's go ahead here. Oh, I think I forgot to publish the @everyone in the Discord real quick. Dun, da, da, da. Okay, so here's what's been going on with the Discord. So right here for today's stream, you can click on Outlooks, and here is a link to all of the outlooks that I have just talked about, just brought to your attention. Plus, there's all this stuff from Primary Vision Network. This morning I listened up to part 2 so far, and I highly recommend listening to Primary Vision Network. And yeah, here are all the outlooks that I just mentioned. So with that in mind, we have NFP. And the expectation for NFP is sideways, effectively. While the expectation also is net a little lower, on an absolute level, NFP is pretty darn high. 200,000 is the expectation. I know I'm not sharing my screen yet. I'm just talking. So right now everything is expected to be bullish on the dollar from my baseline expectations, unless NFP rises significantly, like above the prior number. So if we get an NFP reading that's above 210,000, I believe, then we will be above the prior number. At that point, U.S. growth is still growing, but even then the U.S. dollar might still get stronger because of the whole dollar smile theory. Right now, relative to the rest of the world, the United States is exceptionally strong. So if the United States continues to get weaker, that could be a leading sign that the rest of the world's about to get even weaker. So people want to put their money into US dollars to get onto the safe side. Whereas if the US economic data continues to get stronger, that doesn't always necessarily lead to incredibly positive increases to the upside for the rest of the G7. So you still end up with this relative outperformance of the United States compared to all these other countries, and you end up seeing also a strong US dollar. The only scenario where the US dollar might get weak is if US economic data effectively comes in flat, and then we start to see relative gains in the economic growth of the rest of the G7. And we saw that to some extent over the last 2 months, but the expectations for those to continue are still incredibly mixed. Some people are still looking at indicators that are saying we can still see a recession. There are still calls for a recession. There are still calls for a slowdown. There are some institutions that are now saying only 20% probability of a recession. It's not extraordinarily clear. As far as stuff that we can trade and that we are sure about, the next most forward looking, the next most anticipated economic release is going to be the CPIs, the next release of CPIs, because if you look at the PMIs that have been released over the last month, if you look at some of the high frequency spending data and some commodities, particularly around food and oil, it implies that CPI could rise over the next month or two. And I mentioned this sometime last week, so this signal has kind of been around for a good while. So if CPI actually starts rising again, that could put markets on the back foot to anticipate even more rate hikes, even higher for longer expectations from central banks, and especially potentially the Fed. And that could hurt growth even a lot more. Either we start seeing deflation and growth maintains itself and central banks do not hike anymore, or inflation stays sticky here, potentially goes up a tick or two, and that causes central banks to hike, and that hiking is gonna kill and slaughter growth going into the second half of this year. So we're really still focused on inflation all throughout the first half of this year, all throughout the second half of this year. with all that said and all that macro analysis done, and just, to fill you in on the expectations going forward, whether or not we're going to see a surprise, a big anything with this CPI, a big move at all, it still looks like we're going to get some sort of dollar movement just based off the recent momentum when it comes down to any of the charts that you check out. And speaking of, let's start going down the charts. How about that? So I'll go ahead and move this dude over there. And we are now at the charts. So the first thing I want to go over is the request from James on Euro Swissy. Have you read into the BRICS Summit? No, not yet. I don't think the BRICS Summit's going to do a whole lot of movement, in all seriousness. Especially during an economic downturn, if we do see that negative growth, it's going to hit the BRICS countries potentially the most, because they have the most volatile rate of change on their growth. Let's see here. So Euro Swissy. So let's do that. Turn on the watch list. Oh, yeah, now I remember why I put that dude over there. Like that. There we go. Okie doke. So looks like we hit the likely top. You can see I did a little bit of an update on the tooltip for the range probabilities indicator. Actually, you can check this out. I updated all the settings and I automated a bunch of the settings. Sometime over the next day or two, I just have to make like one more pass of some basic things and I'll be able to release this, write up the change log, fix any typos, all that kind of good stuff. But this, for all intents and purposes, is an update that's ready to go. You guys should probably see this over the weekend, and we'll be able to do trade plans for the next week with the updated version of range probabilities. So for Euro Swissy, we can't really use yield differentials. As far as the week goes, we hit a likely low there. We hit a likely top there. When it comes down to next week, we can look at pivot probabilities. And the seasonal expectations with pivot probabilities do not look particularly fantastic. Yeah, those are some pretty wide and flat low odds. So I wouldn't want to be on the bullish side, I think, going into next week on Euro Swissy. I don't. Yeah, maybe you see a pop above our 0.5 somewhere around here in the 96 handle, and then Lord knows how low it'll go. I mean, for all intents and purposes, you can effectively try and say it's range bound between this 95 and 96 handle, this whole area, and just have that be your baseline assumption going into the next week. But that's how I interpret next week's movement on Euro Swissy here. You could probably just see some straight up Euro bullishness, because relative to other countries, the European area is actually still doing fairly all right. I mean, if you compare it to like Euro NZD, Euro New Zealand has been doing especially well. It's up like 300 pips. And we had that written up as the trade plan for last week. You can see here, this is from July 27th. July 27th literally was not even last Saturday, it was last Thursday. So literally 8 days ago, this was the trade plan we made on Euro New Zealand. And I think as far as timing and price, this is a pretty good approximation of what's actually happened. Yeah. And we can even look at the range probability setup. Oh, look at that. Hit a likely low. Oh, look at that. Hit a likely top. Man, this has some pretty far skew. Huh. I'm going to demonstrate a setting here. So let's see. From here to here is like, call it 4%. Because all I want to do is remove all this tail, right? I don't want to have this stuff drawn on my chart. So I'm going to go into the indicator and set max range percent to 4. So it will automatically cap out the drawing at 4%. Let it redraw, and there you go. Up 4%, right to there. And it tells you, hey, above this line is 1.333% of your probabilities. So it doesn't delete any data. It just tells you and summarizes it in that one little tail. And then it allows you to have tighter resolution bins. So you can say like, hey, look, a lot of the time you top out around here. And when you do go past here, maybe you should be targeting another 100 pips higher. Isn't that cool? Same thing with down here, right? There's definitely a risk of you going down here. Definitely a risk of you going down there. Let's see here. Let's look at our pivot probabilities to the downside, see how it performed for this week. I'm pretty sure this was the likely area. Yeah. What is this? Oh my God, it's like 89.5% of the time. Look at that. Hit target percent under bullish range bias. 89.5% of the time you hit your target of R0.5. But it's 89.5% of the time. Yeah. Only 10.5% of the time do you hit the stop loss at that R1.5. I mean, you can just see that's very, very good probabilities that you don't go past that S1.5 this week. And that was the expectation. So we'll be doing trade plans probably later today or tomorrow, depending on my availability. I'd like to crank out the update for range probabilities today, so we'll probably do our week ahead trade group, week ahead trade plans, with pivot probabilities, range probabilities. We'll do that probably on Saturday sometime, and that's a private live stream for everyone who's in the trade group. So let's see here. Anything else? So we got Euro Pound is the other one we should look at. I know we have NFP coming up, but NFP doesn't come up for like another 40 minutes. So we're going over some of the research here. Okie doke. Again, very flat odds next week. Those look good for being a bear. How about to the upside? Yep, very consolidated upside probabilities until that's your bullish threshold right there past R1.5. Because once you go there, you're talking about a lot of variance. Yeah. So if you do any shorts around here based off interpretations of this indicator, a stop at R1.5 looks reasonable. And, check that out. High probability buy, high probability sell. Looks like it did its job. And we hit the pivot probability, the probability weighted pivot high, which is this orange dotted line. We just tapped it this week. Okie doke. That looks pretty straightforward. Now, one of the assets that is likely to move today because of NFP, and we can go ahead and bring up the calendar here on the right-hand side of the screen. Thank you, good old TradingView. So, average weekly hours, employment change, full-time employment change. There's non-farm payrolls. So non-farm payrolls comes out in about 40 minutes from now. So we got a bit of time to kill. We got some things we can do analysis on. If new outlooks that get posted, we can see if there's any useful information that comes out. As we get into the announcement of NFP, we'll be going over to Financial Juice, and we'll be listening in to the live feed as they announce the outcome of NFP. Yeah, look at that. A report released on Thursday highlighted the U.S. labor market continued strength and the cautious outlook for markets. So things are still mixed as far as expectations go, because right now it's kind of a pivot point. Does the economic data reaccelerate from here, or do we start going lower? Do we maintain? So we know we were at a pivot point now that we've crossed over here into the third quarter. So the question is, how is the third quarter going to actually play out? And we'll have better expectations of how it'll actually play out closer to, for example, the release of CPI. So let's go ahead, head on back on over to the charts. Remember, you guys, to leave a like every single time you come and hop into the stream. I appreciate every single one of you for watching each and every day, Monday through Friday, 4:30 a.m. Pacific, 7:30 a.m. Eastern's the time that these streams start. Today's the last stream of the week. And then once the weekend is over, come Monday, the streams will start again. And yeah, now is just a good time for requests on any charts you guys want. And I'll do some week ahead trade plans. I'm not going to, cover every chart under the sun, right? But I think one of the charts that I haven't covered recently was oil. Oh, and actually, speaking of which, you guys had expectations that we would end the week above the close. So from here, I hate it when the drawing tool just doesn't work. So from here to here, you guys had expectations that we would end the week positively. And you guys were correct. Now, some of you guys were probably wondering what the hell happened here. Truthfully, I don't know. I haven't been watching the oil markets recently. I actually haven't been really getting any outlooks on oil at all recently. Actually, I haven't been getting that many videos sent to me on YouTube on oil. So was this move in oil just a fluke? Anybody who trades oil or has any good analysis on oil knows what's happened here? Because, when I don't know something, I'm just going to straight out say, oh yeah, I don't know. Let me go ahead and ask someone who does know. Get some research, read some outlooks. US 30. Gotcha. Hey, Patrick. Nice to see you guys in the chat. Okay, US 30. Let's go over to, I believe it's the Owanda. So up and then down. Did we hit our likely low? So that move is right. That move is right. Hey, we hit the probability weighted pivot low. Another week in a row. Yeah, Moneybags in the chat for that one. Oh, it's can be pretty straightforward, man. Sometimes things can get pretty straightforward. Let's look at our range probability, see how that did. Oh, yeah, we had a likely top, and we hit a likely low. Wow. Wow. Let's see here. How far is that? Let's call it 5 or 6%. Let's do min range 6. And let's hide that. Let it recalculate. Whoa, yep. That's what I was... Oh, hold on. Did I do it incorrectly here? Min range low. Nope, that should be correct. So I think I found a bug. This is exactly what I was hoping I'd find during the stream, to be quite frank. So it's like, Joe, fix it. fix it. Like, thank God, you know, this is exactly the type of thing that I do when I'm not on the stream. Let's see here. Yeah, it'll be interesting. Oh, you know what I needed to do? I need to put in a negative sign here. Yeah. Yeah. All right, I'll go ahead and when I run the code for this, I'll go ahead and I'll put the negative sign in on the code so you guys don't have to put in the freaking negative sign. And look at that. Now it works. You just forgot the negative sign. Ay. Okay, doke. It's little things like that. It's always little things like that, you know. Okay, doke. Let's check out gold, XAU, USD. Also on the Oanda chart. Oh yeah. What is this? This is saying yes. That's like 60% of the time this is your low. I wouldn't be surprised if NFP came out and we just dumped down another like 10 points to 1920. I would not be surprised at all. All right. It is 5 o'clock in the morning. And we are 30 from NFP's release. Let's go ahead and check out DXY. Our expectations in our trading assessment survey done once a week. Actually, that'd probably be a good time for me to whip up the trade group survey and maybe post it in here on the Friday show. Let's see. General outlooks. I think I'll stream because I need to get focused to you guys here right now. But know that the number of guys who came into the survey, we had only like 7 people give responses in the survey. It's surprising how well the aggregate survey response is in predicting trading expectations for the week ahead. Like, it is very, very good. Also, there's a good benefit. If you participate in the survey, you get to see the results. So hopefully I get, 10, 20 people who participate in the survey this next time around, and the survey grows and grows and gets more and more accurate. Because it's only a 5-question survey. Like, people can do it in actually less than 5 minutes, less than a minute per asset. Let's see here. Yeah, 1920, good time to buy, because seasonality gold is bullish in August. Yep. It looks like we'll probably top out here on dollar for the week. 85% of the time, this is where you top out. Yeah, 84, 85% of the time, this is where you top out on gold for a given week. Man, we're getting a lot of viewers here on NFP, at least a lot compared to what I usually get. Remember to leave a like, guys. Support the small channels, subscribe, notifications, all that good stuff. Hop in the Discord and participate in the trading assessment survey that happens once a week. And then we'll be able to more accurately measure trading expectations. And then from that aggregate of trading expectations, we'll be able to get actually reasonably good forecasts for directional moves on the major assets that we're trading for the week ahead. And actually, a lot of the methodology for how I conduct that survey and how I construct the questions and do the math behind it, because after I collect like a year's worth of weekly surveys on this stuff, I can do some really cool analysis. So the more people who participate in the survey, the better. But a lot of the analysis comes from the methodologies in this book here, The Failure of Risk Management, Douglas Hubbard. Now, it's like I'm doing a very, very, very rudimentary version of the survey, right? So it's not like this is going to be, some super, no, the survey is 5 questions. It takes 3 minutes to answer it. And I just structure the questions in a way where we can actually do some basic probabilities on it and figure out with some generally accepted reliable methods how to quantify the subjective expectations of retail traders who participate in the survey. So that's how that works. And hopefully you guys can appreciate that for what it is. Because I'm just one guy. I don't want to do like a whole, 25 question survey that I have to update once a week. Okay. We are getting closer to NFP. Now it's 25 minutes. Let's see here. What else could I cover? We could do Bitcoin. Hey, you guys had bearish expectations for Bitcoin based off the survey, and that's what this orange line is. Oh, also, when the indicator does this, that means that you can't put in those max ranges anymore. So you just tick this little box, and then the thing will load. Yep, thing will load. So yeah, you guys had the correct trading expectations last week on July 29th for BTC USD. You guys had exactly the correct expectations. Wow. Yeah. Bitcoin does not have that sort of peak, those multiple peaks that we usually see in these other assets, right? You can see week to week, the returns are much more smooth, huh? Ain't that interesting? Let's see if I can recreate a bug. Nope. All right, cool. Good to know I fixed that one. I didn't create an issue putting out a demo live on stream. Actually, I can demo this out. See this? Simulations. All these probabilities are generated with a bunch of simulations. Right now, 3,000 is the number of simulations I have in by default. But I've rewritten the code so you can put in I've done this before where I put in 50,000 simulations. But I don't want to... Okay, I'll put in 50,000. See if it loads the thing. See if it loads 50,000 simulations for Bitcoin weekly data. And it didn't change the distribution at all. Just like that, 50,000 simulations. Oh, nope. Took too long to execute. Nope. It loaded for like 3 seconds. And then it tried to load another 50,000 simulations and it crashed. Oh. Oh, actually, no, there you go. It works. Yeah, see? 50,000 simulations, and there you go. Didn't really change the distribution at all, but or the probabilities, which is why I set it to 3,000. Because at that point, your data starts to convert. Sometimes you need a little more simulations. Sometimes you have to bump it up to 5 or 10 if you want, depending on the amount of robustness really you want in the simulation. Like 3,000 is enough. 3,000 is enough. People tend to overestimate the amount of data they actually need for statistical significance. Like, and I'm not talking about like the minimum threshold of, oh, you gotta have like 20 samples at least. I'm talking about guys who already have tens of thousands, hundreds of thousands of samples. But at least in financial markets, it makes sense because, you know, there's all these fat-tailed risk events that you have to take into account that only happen like once in a generation. So you need to have tens of thousands of simulations for those. But under nominal trading expectations, where you're trying to figure out where something lies 80% of the time, you're already taking steps to protect yourself against those tail events. Or in the situation when those tail events do occur, like during COVID, you position yourself in a way to actually get an asymmetric return, an exposure to when those events occur. Let's go ahead and check out your request there, Felios. Great British Pound USD, because we got a lot of GBP outlooks coming out. Hey, check that out. We can go to a lower time frame if we want. Actually, am I still loading 10,000 simulations on this one? 50,000? No? Okay, cool. Hey, check that out. It's like 80% of the time your low for the week comes in around here. I had a couple of small trades. See, this is why putting in small position sizes on your first trade is so important. Look at that. Stop out, stop out, stop out. If these position sizes were 1%, 1%, 1% risk per trade, you'd be down 3% on these small trades. When you're doing a trade for a single day or only for a couple of days, it doesn't make sense to put on multiple percent risk or even 50 basis points, which is 0.5% of risk. You know, if there's a universe you have of tradable assets that's like 20, 30, 50, 40 tradable assets that you get decent leverage on, why would you put yourself in a situation where if you know you're going to be taking, you know, hundreds of trades or, you know, let's say 5 or 6 trades a day, why would you put yourself in the position where if all those trades are losers, which very frequently you can go days and days and days losing a lot of trades in a row, why would you put yourself in a position where if you lost all those trades under, you know, extreme positioning or extreme volatility, whatever the situation is, you're just not familiar or competent about actually trading the asset, whatever it is, what's the risk managed? How much are you going to lose? If all these trades lose, how hard are you going to get hit? And once you do the risk calculation, once you find out like, oh, I'm going to put on, you know, 20 tiny trades, but then you go ahead and you add it all up and you're like, well, if all these 20 trades lose, you're going to be down 10%. Maybe remove some of those trades, maybe reduce the size even further. Because I get diversification, right? Diversification is, you know, great. You generally want that. But man, you don't want to ever put yourself in a position where, you know, some terrible event happens and now you're down 10, 15, 20%. When you're actively trading and looking at all your risk parameters, all these range probability things, it should be very, very clear, like, oh, a stop down here makes sense because you only go down there, like only 20% of the time do you go below this line. And I get that 20% number because I look at this little tooltip right there and it tells me, hey, above this line, you get about 81% of your probabilities. And that's about a 0.6% decline. So from here to here is roughly, 0.6%. So if you want to risk 1% of your account on a 60 basis point move on pound dollar, by all means, right? And I know there are scalpers out there who are like, damn, I'm risking like 2, 3, 4, 5% of my account on a trade just to make 20 pips. Like, there's smarter ways to trade than, trading with a naked chart and just waiting for highs and lows to break down. Because that's what, frankly, most of technical analysis is. It's just waiting for a higher high or a higher low or a lower low or a lower high. So you can do that, or you can look at the yield differentials. You can look at the yield differentials and see, oh, that looks really bearish. Oh, that looks kind of bullish. Speaking of which, let's actually look at our daily yield differentials here on pound dollar. Oh, probably should have been bearish this whole time, and I think those yield differentials are still getting even more bearish. Yeah. Yield differentials are still super, super bearish across every single duration. From the 1 year differential, that means from the UK 1 year yield, from the US 1 year yield, the difference between the yields of the two countries for the 1 year duration, it's going in favor of the US dollar. So people are using the pound dollar exchange rate and they are moving it lower because they're like, hey, I have all these Great British pounds and I see that the yields in the United States are actually rising compared to the yields here in the UK. Maybe I should take some of my Great British pounds and exchange them for US dollars so I can go and buy the bonds that are getting better yields in the United States. Get more yield on the cash I have just lying around. And billions and billions and billions of dollars are transacted this way for these exact purposes. Yield differentials have been a known leading indicator of FX prices for like more than the last 30 years. So this looks pretty straightforward to me as like pretty freaking bearish. This looks pretty freaking bearish. And considering that we just went over outlooks at the beginning of the stream that said, yeah, we don't like being long the pound right now from a lot of institutions that manage billions of dollars. I don't see the appeal. Let's see. Is there any other requests? We got less than 15 minutes now till NFP comes around. USD CAD is making new highs. I can see it on my other monitor. My USD CAD long from way down here. I'm still holding it. We crossed this bullish threshold, which actually is based off the monthly pivot probabilities. Once you go past this R1 monthly pivot, you are dealing with potentially going higher to R1. We can also look at our range probabilities. You have another bump up here. Yeah, big spread in the returns. Let's see if I can like reduce that. So that's like 9%. Yeah, I'm glad I put this feature in, so then it can kind of reduce the range. So max range 9%, and that should cap this out at 9% somewhere up here. Yep, and then that's going to give us a bit better of a resolution. And now you can see why I drew that arrow, because there's a bump in your distribution where your monthly tops come in on USD CAD. So either you're getting your top in here, or once you cross the threshold, you're probably going to get your top in somewhere in the upper part of the 134 handle. So I would not be surprised to see actually 135 at this point. So long these yield differentials actually continue getting more positive, because you can see the yield differentials here, they look mixed, but I see this as bullish, because all of the short-term daily yield differentials are getting stronger very clearly in that. You can see that in the first two columns of this thing here. So this is mostly green, this is mostly green, and then this is all red. This is the lowest and slowest lag. So this is comparing the yield differential from today to 25 days ago. So you can see, like, okay, 25 days ago, the yield differential was, like, it's still really bearish compared to 25 days ago. But for trading purposes, looking at this can be very important. Seeing that this thing is actually going up shows you, oh, something changed between now and 7 days ago that made us more bullish, compared to now and 25 days ago that makes us more bearish. So there's some longer term lagging bearish thing that happened, and that mostly probably came from over here, right? If we go back 25 days, that's way over here. And then, well, I give it 1, 2, 3, 4, 5, 6. So by the end of next week, the long-term yield differentials, if we're like all the way up here, these yield differentials might just be flashing green, 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 green. And while it's flashing green, 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 it might be most opportune time to actually sell. Yeah, because below here, below 135.7 is where 80% of the time you top out for a month. But you can clearly see, like, oh, sometimes you can go like way up here, like there's a 2% and a 9%. Actually, here's the easiest way to summarize what I'm talking about. I have this feature working. I have these probability lines working, where it'll actually tell you what price is what probability. So you could see, oh, here's the 90% probability, here's the 95th% probability. And it tells you, oh, you know, that's at 138. Oh, this is at 138.1, and this 95 is at 138.8. Oh, here's the 60 and the 70% probability. So I'm saying, like, okay, somewhere around here. Somewhere around here we'll probably find our top for the month, if we continue to see this relative rise in positive yield differentials for the United States. We're now about 8-ish minutes away from NFP. Hopefully you guys have been enjoying the commentary and the breakdown of some of the upcoming features if you're in the trade group and have these indicators. We'll be able to do some trade plans for the month ahead and the week ahead with these tools, hopefully over the weekend. Going into Saturday, hopefully these tools will be out. Okie doke. Yeah, I like having this max range and min range thing. It really helps. It really helps make the indicator a lot more legible. I can probably bring that down maybe like another %, because the smaller you're able to make this, it actually increases the resolution because it makes the bins smaller. So if you have a max range of 6%, your bins are going to be smaller compared to having a max range of 10%, because from 0 to 10, it's a wider range. So you can also increase the number of bins. I mean, we can do maybe 80. I don't know if that's going to make it illegible or not. We're about to find out. Oh, wow, that loaded fast. Yeah, there you go. 80 bins. Yeah, so probably more specifically up here. Yeah. So that just increased the resolution that we have. Getting your top right around here, or right around there. But I prefer the default 50. Okie doke. Let's see here. Anything else? So this trade is doing well. The yield differentials are going more positive. The momentum's about to go trending. Let's see here. Anything else? Anything else to cover before we just delve deep into NFP stuff? And I'm sure people are now going to go and check out some streams actually at this point in time, because there's a lot of NFP streams I bet that are starting. Well, that have probably been starting for like the last 5 or 10 minutes. Truthfully, when it comes down to NFP, unless there's a surprise, dollar's probably going to get stronger, guys. Unless there's a surprise, dollar is just flat out probably just gonna, on the pairs that have had a very strong dollar movement, like USD CAD, you'll probably see continuation going into the end of week, into the beginning of next week. On euro dollar, you see how it's been holding up? It'll probably hold up. Just whatever's been happening over the last 24 to 36 hours will likely continue into Tuesday of next week, if NFP is about the same. Like the analysis for NFP is very, very straightforward. There's no need to over analyze. Hey, Ahmed. All right. Euro CAD. I'm looking all over for reasons just to pull up any chart. Oh, look at that. We had our expectation for down and then up. And wow, I really am surprised we haven't gone past that R0.5 weekly pivot. I thought we'd be much higher by now. Considering how weak the Canadian dollar has been. Oh, and look at that. We hit the probability weighted pivot low at 145. It works more often than I like to advertise, that's for sure. Yeah. Let's go ahead and check out range probabilities, see how that's held up. Oh, look at that. It hit another bounce right there. Another likely low right there. You can probably put your stop right there. So from here to here, don't get me wrong, that's like 100 pip stop, but that's under the situation where you really don't want this thing to be going past 143.8. So buying here, and then this is your tail risk. This seems, yeah, this seems okay. We already did look at gold. We looked at it over on Oanda. And then GC. I mean, USD, we'll look at it over on Oanda. Yeah, hit the likely low, hit a likely top. And as far as pivot probabilities go, the probability weighted pivot low, but then it didn't bounce. So it'll probably drift lower. It'll probably go into the 1920s, probably into the 1910s, and then bounce from there. We can check it out for the month now that we're in August. All right, we're about 2 minutes away from NFP. So we're going to get ready for NFP. Yeah, see? Look at that for gold. A big bump in your distribution right here. Around 1920 and 1910. This whole spot right there. And I absolutely would be surprised if we did not make some higher high this month, considering we just went down. The fact that we have not made any sort of higher high around 1980, 1990 is kind of nutty. All right, let's go to the DXY real quick. Let's go to a 2-hour chart, and we'll load up our daily range probabilities. Calculation timed out. Quick way to fix that is just to switch the time frames and let the indicator reload itself. And it didn't. So what's going on here? 3,000 simulations. Look back at 4,000. Yeah, all this stuff looks fine. Go ahead and turn on Financial Juice now.
Ten seconds. $187K, 187K, lower than forecast. 200K. Unemployment rate 3.5%, 3.5%. That is lower than the forecast of 3.6%. So also seeing US average earnings year over year at 4.4%, 4.4%. That's higher than forecast 4.2%. Canadian employment change minus 6.4%, minus 6.4%. That's lower than the forecast of 25K. So that's minus 6.4K there. And the US Canadian unemployment rate at 5.5%, 5.5% as expected. The US private payrolls at 172K, 172K, lower than forecast 180K. Average work week hours 34.3, 34.3, lower than forecast 34.4. Average earnings month over month up at 0.4%, 0.4%. That's again higher than forecast 0.3%. Manufacturing payrolls at minus 2K, minus 2K. That is lower than the forecast of 5K. Labor force participation as expected 62.6%, 62.6%. For Canada, the participation rate at 65.6%, 65.6%, lower than forecast 65.7%. And Canadian average hourly earnings year over year at 5%, 5%,
likely top for
higher
the
than
day.
Forecast 4.1%. So looking to the markets here, a bit of whipsawing in the S&P 500, slightly towards the upside though, and some weakness emerging in the dollar as well. Bitcoin also seeing a notable amount of strength, and WTI seeing some moves towards the upside as well. So again, US non-farm payrolls coming in below expectations, 187K on a forecast of 200K. And the unemployment rate also below expectations, 3.5% on the forecast of 3.6%.
I'm going to take a shot at that.
Also noting a prior revision to the US non-farm payrolls revised down to 185K from 209K.
Uh-oh. Revised non-farm payrolls lower. Oh, no. I'm going to hold this trade till end of day. And this is an actual trade I just did.
For those interested, we have posted out the non-farm payrolls and Canadian employment reports on the feed for anybody interested.
Yeah. Trading peaks in your distributions.
Also, just noting in the report here, the U6 unemployment rate seen at 6.7%. So again, U6 unemployment rate at 6.7%.
Hey, Dr. Rage, nice to see you. Hey, Patrick. Man, it's so nice to see a bunch of friendly faces in the chat. Let's go over what happened. US unemployment rate went lower, which is good.
So dollar falling slightly after the US payrolls data. So dollar index down around 0.1% on the day. So the was around flat on the session before the release. S&P up around 0.2%. Again, also around flat ahead of the release.
We can turn you off now. Does this change any of our expectations? That's what we need to answer. Does this change any future trading expectations? The Canadian data doesn't really change much. Canadian average hourly earnings year over year. So those are Canadian wages. So wages are inflating higher. That might make the Bank of Canada a little squeamish. Let's see. Bank of England's pill, energy prices, restrictive rates will weigh on activity and prices. Okay. So far, the euro dollar short is working out. Let's see here. US private payrolls better than the previous number, not as forecast. So that's economic growth. Good. Let's see here. US average work week hours, a 0.1 change. Okay. Average earnings month over month, same as previous. That's good for growth. US manufacturing payrolls, that's bad for manufacturing. So maybe the manufacturing PMIs and manufacturing exposed sectors get hit. Oh, Philius, now the US dollar will make a move lower and will give us a good opportunity for a long entry. Do you agree? Well, understand that the euro dollar trade that I took is literally just for today. Just like the euro dollar I took yesterday was just for that day. And I'll get more specific in the trade group when I post my trade plans and I post my trades, what the time horizon is and what the purpose of the trade is. Like, is it to hedge another position I have open? Is it for just the day, or is it just for the week, right? Okie doke. Let's see. Do I think this will be a good opportunity to enter long on the dollar? Generally, actually, it's not the worst, but based off my interpretation of like the indicators I have, that can actually be still quite risky. I mean, trading in general is just net risky. We can go back to here and you can see, oh, you know, pick the top out on NFP. Oh, Joe, such a good trader. It's just like it's a distribution. You just manage your risk and you don't bet too much. So is this like a trade that I could hold for into next week? I wouldn't. No. I'm not going to. That's my intention with the trade I just took. I took pound dollar short for keeping the next week. Alrighty, Great British Pound USD. I mean, the yield differentials on those were on this one was super negative, and the yield differentials today are even still getting more negative. So if we look at it on like a 1 hour, right, you can see how that spike got shorted. Let's look at it on a 2 hour, look at our daily range probabilities, hide these drawings. Oh, look at that. You had 2 opportunities to get your short on. Maybe you got your short on here and didn't do anything over here because maybe you thought the volatility was going to bring you up to around here. Maybe you could add into here, or maybe you could have really lucked out and got over here where you could have shorted, stop right around here. So from here to here, that's 81 pips. But the news wasn't set up in going into the event, going into NFP. There was no indication that NFP was going to be like bang busters. NFP did come in below expectations, and I did mention at the very beginning of the stream that we have a dollar smile situation. If NFP came in way under forecast, and I specifically mentioned this number, right, around 190, that the dollar would get stronger. If we came in closer to, if we came in above 110, that the dollar would also get stronger. It'd only be if we came in this like 200k, 209k, that dollar would actually get weaker. Right? So when we go ahead and we look at our charts, right? If I go back to euro dollar, it's still doing its thing. It's just bouncing around now for the day. USD CAD is going up, up, and away still. The dollar is hanging in there. This is where I just very clearly demonstrate, hey, knowing what you're doing when it comes down to interpreting these economic events, while it's good to understand how to interpret economic events and, you know, what they are literally, what they could potentially be moving in markets when they release on a surprise or not, it's far more important to have a basic understanding of future trading expectations and current trading expectations. So that then when new information comes out like this, you are readily prepared to go in and express your expectation in the form of a trade. But your expectations could be very different from my expectations. I'm running this stream so that then I can tell you guys, hey, here are my expectations. Here are my trades. Come join my trading group. Get my indicators, right? That's how these streams work. One question for USD CAD. Does the interest rate differential on USD CAD mean that interest rates may be lower on the CAD Well, we can go ahead and check that out. USD COD. And then transition back. Check that out. Tapped that. I would be still surprised if we didn't go up to there, considering this implies that hiring is now slowing down in the United States. So let's go ahead and answer the question. Let's go to a daily chart so we can get the daily yield differentials. And it looks positive. Positive. We see possible CAD weakness. Yeah. Especially over the shorter run, over the last few days. On the USD CAD, mean that interest rates may be lower on the CAD. See, this indicator doesn't try and measure absolute levels. It measures the relative movement of those levels. So when you see Canadian yields rise, but US yields rising more, that makes the yield differential still in favor of the US dollar. And people are still incentivized because of the faster increase in the US yields compared to the Canadian yields to move money from their Canadian dollars to US dollars in order to buy those bonds and get that US yield that is appreciating faster. So when the differential is positive, it could be due to that effect or due to an effect where US yields stay the same, but Canadian yields are falling. School in 2 weeks. Well, good to know that you're in the school. You're in the school. Good to know you're in school. To say the least. Let's see. Anything else? Anything else? We can go ahead and check out Euro USD. Still negative yield differentials, but you can see short term, you're starting to see these little blips of green, right? You can see, even more green showing up. The yield differentials are starting to get more positive today. However, just because they're positive on this shortest of short term, look at what it's been over the last week. The yield differentials, the negative move in the yield differentials over the last week account for the majority of the negative move. Most of the red you see here is because of the move in the last week. So just because you see a little bit of green on the short term over the last day or two suddenly pop up after an economic event, I mean, that happened here, that happened here. There are many examples of, okay, you get a little bit of a pop short term, but over the last 7-25 days, it's still pretty red. It's still pretty bad. So now it's just a question of, this is big green candle. We're now halfway into the drawdown on that trade. So now the question is, how close is this to stopping out? It's about halfway close to stopping out. But most of the time, if I can go ahead and bring up the tooltip on this thing, I guess I need to refresh the chart to bring up the tooltip. Or there we go. 53.7% of the time, the top comes in here. So it's effectively a coin flip. Either the top comes in here 50% of the time for a given trading day, or this volatility continues to be directional and it goes up for another 30 pips. And in that situation, this is a smart stop. Because instead of only getting stopped out for 25 pips at a high probability zone, I would rather get stopped out for 25 pips rather than holding onto a drawdown for 40 to 50 pips. So by stopping out here, I save myself a headache of 15 to 30 extra pips of drawdown. And then potentially, if this thing were to rally into the next opening, like Sunday, Monday, Tuesday, into the first 3 days of next week, if it was just to go up, and up, then thank God I got out here, right? But I take a lot of trades like this. A lot of trades like this. And it's just a matter of putting on reasonable amount of risk. So then every day, when you hit likely tops or likely bottoms for the week or the month or the day, that if you do hit those stops, you can take another 10, 20, 30 trades. Because, trading can be a big casino game. And when you trading kind of like casino gambling sort of thing, that's when you need to go into the description that I have in the description, because there are just some people who should not be trading because they have a very addictive personality. They're not really treating it like a business. They're letting their emotions get the better of them in like, oh man, this trade is doing so well, I need to add more, without realizing they could be at a likely top. Or, oh man, I'm in such a huge drawdown on this trade, I need to be getting more money to pay for my margin. I'm like, no, you just need to get out of the trade, because the next most likely area you're going to go is about another 150 pips lower. Like, where is the management? Where is the management on some of these trades? It's non-existent for a lot of people. At least with these tools, it's like, oh, cool, I have some exact probability at some exact level based off some historical data. I mean, yeah, sucks that the trade is in drawdown, sucks the trade might lose, but is this going to bankrupt me? On one trade. What did I say earlier in the stream? You're not risking 1% a trade. Like, it doesn't make sense. The summer months are a good time to take a break from this addiction. Yeah, go out, get some sun, and, find some cool pool parties to hang out. Okey-doke. So I've been going now for about an hour and a half. This is one of the longer streams. I'll be posting an update on how this trade performs. Who knows, I might get stopped out in like the next 15 or 5 minutes from now, because it's just going up, 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 and up, and it's just grinding higher. For all I know, the trade will get stopped out, but I'm gonna go out and get some food, and I'll live another day to do more trades. This is like 10 basis points of risk. It's like very, very, very small. You know, when you do large time frame stuff, maybe then it makes sense to do 1%. But then when it comes down to smaller time frame stuff like this, it's like, why? Why do 1% per trade? Will it stop out? Will it go to that 110 sec level? Right? We'll probably go up to here now, though, now that we're at these levels, right? So close. Alrighty. I'll update you guys if this stops out in the Discord. Other than that, I'll say thank you guys for watching here the daily plan stream. And I'll see you guys next week. And if you're in the trade group, I'll see you on Saturday for the week ahead and month ahead trade plans that we'll be doing. And yeah, we'll follow up on that little day trade I did for NFP. In a bit, you guys.